Hello, and welcome to another Anaplan webinar with platform specialists. In this webinar, we'll show you how Anaplan can be used to efficiently plan your P&L, breaking down revenue, workforce, and expense planning in our Accelerated P&L Planning model, or what we call the A.P.P model. On the webinar today, we have myself, Aubrey Woods, as well as a few of our certified Anaplan model builders and master Anaplanners at Platform Specialists to take us through the solution. They're Eddie Fugelsang, Nick Mascia, and Joe McLaughlin. Before we get into the solution itself, I'd like to briefly mention a little bit about who we are and what we do. Platform Specialist is an EPM consulting firm specializing in financial systems implementations, project management, application development, and support for best-in-breed EPM technologies, including Anaplan. We pride ourselves on efficiency, delivery, and providing a great customer experience for our client partners across the globe. Now I'll pass it over to Eddie, who will begin walking through the A.P.P model.
Hi, everyone. My name is Eddie Fugelsang, and I'm a solutions lead at Platform Specialist, as well as a certified Anaplan model builder. I'm going to be walking through the revenue planning portion of the model, but I want to start off by mentioning that the model we'll be walking through today is a model that we've put together to act as a solution accelerator for Anaplan implementations. It's scalable and customizable to fit the P&L planning for most companies, and also helps implementations to hit the ground running. So with that being said, for the sake of simplicity, this demo will be on a slightly smaller scale, but can obviously be scaled up as needed. You can imagine a full-blown production application having fully defined business unit structures as well as other dimensions such as products. The model can be broken down into three main planning dashboards with a full P&L reporting dashboard and a fourth. We'll walk through each of these dashboards, which are revenue planning, workforce planning, non-workforce related expenses, and finally, full P&L reporting. Additionally, each main dashboard has a sub-dashboard or two to help keep the main dashboards clean. They also house information that's updated less often or secondarily to the main plan. One thing I just want to mention is that all of these dashboards are seamless and real-time, so changes made in one are immediately reflected across all the others. And additionally, throughout the model, we've built a workflow mechanism that has been added in to track the progress of the planning process. This particular instance of the A.P.P model has been built for Spacely's Sprockets. They're a consumer goods company that manufactures and sells futuristic sprockets. In their model, they have a few different list structures, including regional departments, products, and employees. So jumping right into the model, we'll start off with revenue planning. But before we get into the actual planning process itself, I want to talk quickly about historical data and how it's used. For revenue planning, two different sets of historical data are going to be used here. So we have the gross profit accounts up here, and then down below we have our units sold. As you can see, the data has already been loaded for us for prior periods for each department, and we'll be using this data to help build out our plan. Opening the revenue sub dashboard for prices and unit costs, we'll see a simple input module here for these two items that can be entered by product. The price and cost of the products will be used as the basis for our revenue plan, which is going to be trended on the main revenue dashboard. So I'm just going to update the cost for Sprocket 1A here quickly. We'll increase it by 10. And then we'll move over to the main dashboard by clicking here. So on the main revenue dashboard at the top, we're presented with a few different assumptions that we can change to affect the overall trend of our revenue plan. The first of these assumptions is the overall trend method for departments. Here we can select a department and decide which method of trending we want to use for it. So in this model, we've provided choices for trending by the trailing 12 months, trailing 6 months, and prior year. Once the method is selected, a unit adjustment percentage can be entered for each department as well to forecast unit changes. The other assumption allows us to override the department method for specific product lines, since certain product lines at Spacely's don't follow departmental trending. We can set these trend methods and unit adjustments here. And with a few small updates, our trending is now set up. With the trending completed, we're now able to review the price and unit costs for each product and also have the ability to enter adjustments to our trended units at the individual product level. So if we assume here that Space Leads usually sells more of Sprocket 1A during the summer months, I can go ahead and just adjust the units for July and August. So let's say we'll add in 1,000 for each. Now that's reflected in our total units, and the units multiplied by the price is then going to be used to calculate our sales. In addition to adjusting the trended units, we also have the option to make adjustments to the sales revenue and cost of goods lines in our forecast. As you see here, we have 3 lines for sales and 1 for cost of goods, and we've already added in some adjustments throughout the year. I'm going to increase the COGS for the month of August and have that reflect down through gross profit. So we'll say an extra 500. All right. Now that the revenue and cost of goods are planned out, we can report on them in a few different ways. Here you can see we have the total planned gross profit with the breakout of all the lines underneath it. And by clicking on the drop down, we can drill into some further detail to only show the sourced, trended, and just our adjustments if we want to see that level of detail. Or we can go back to total planned and see everything all baked in together. Additionally, we've built out some graphics in the dashboard to help visualize the breakdown of account by product or total products. So here we can see that we have total products across our lines, and then we can also drill in to see one specific product. And likewise, over in this pie chart here, we have all of our different products and services. We can look at individual lines again. So this concludes the overview of the revenue portion of the model, and I'll now pass it over to Nick Masha, who will walk through workforce expense planning.
Thanks, Eddie. Now that we have walked through the revenue planning piece of the model, let's talk about workforce expense planning for Spacely Sprockets. In this section, we will demonstrate how workforce planning can be performed within our app model by viewing workforce planning end user dashboards, and by breaking down functionality and concepts within our workforce expense model. The app model contains 2 workforce planning dashboards. The first is workforce management, which is our central location for input and details. The second is position reporting. Here, the model allows key workforce metrics to be viewed by position totals rather than by individual employee. Let's begin with diving into our workforce management dashboard. Here, as mentioned earlier, we have sections for both input as well as read-only and analysis. The first area to discuss is the employee roster. Typically, the raw data for workforce expense planning will come from an employee roster file. That file will probably contain information such as employee name, position, salary, and various other information. The app model has the capability to load all this information for current employees through the Import Employee Roster button. Once employees are in the system, current employee details can be edited from this dashboard. Furthermore, to be hired employees can be added using the Add Employee button. Here, to be hired employees can be included in the planning process so that potential future expenses can be visible at an estimated start date. Next, let's quickly look over the table with all our workforce data. The data, which originates from our employee roster file, is then populated into this table. For example, salary. In the roster file, we load salary for the total year. Behind the scenes calculations then breaks that up by the month. Here in our table, we can see roll-ups at the quarter and the full year. There is also the option to scroll through the org. We can go as high as viewing everything at the total org level, at the region level, at the department level, and also by each individual employee. Here we're looking at several monetary figures, such as salary, bonus, benefits, and taxes. And the only non-monetary item we have in our list is headcount. One thing to point out here is that the headcount jumps from 5 to 9 from Q2 to Q3. That is because start dates for 4 of the employees start in August. Now let's look at our assumptions. Completing these inputs populates the expense table. Here the model includes 4 inputs that are applied at the department level. Benefits rate, tax rate, merit increase percent are all percentages. The figures for these categories are calculated by multiplying the employee salary by the input percentage. The merit increase month is a time period. In the selected period, the merit increase will be applied to salary. At this point, it is important to mention that the model has plenty of flexibility. For example, if it was desired to include a breakdown of benefit categories such as phone or healthcare, those can easily be added in. Also, different drivers to calculate workforce expenses can easily be configured into the system as well. The last piece of this dashboard we need to discuss is the waterfall chart. Our drop-downs let us quickly scroll through our employee and organization breakdown. We can also drill down into a specific time period. The graph lets us visualize the data in the above table to see our personnel cost breakdown. Now that we have discussed each section of the workforce management dashboard, let's run through an example and watch how, as we input, changes are made throughout the system. If we add salary for our to-be-hired analyst, we can see how the figures in both the table and the chart change. If we remove the salary, we'll see those figures removed from our visuals. At this point, we will continue to the positional reporting dashboard. This dashboard is a supplementary dashboard created to view all the information from our workforce planning by position. There are no inputs here. This dashboard is purely for analysis. If we look at the data table, we can see the same line items from our workforce management dashboard. A main difference here is that the information can be viewed on a monthly basis, and then a key addition on this table is that there's the ability to scroll through position to see all of our line items summed up by position. Next, let's dig into the charts below. The first is a sample pie chart that lets us break down position totals by line item. As we can see here, salary figures can be viewed for analyst, manager, director, etc. The final graph we see here is a mixed chart for all of our workforce expenses. Our dropdowns consist of total org and time. Each position is located in the x-axis, and each variable that we see here in our legend can be viewed by position. Now that we have walked through our workforce setup, we can click the Boolean checkpoint that notifies users of the system that our workforce expense planning is complete. That wraps up the workforce expense planning section of the app model. Remember that the setup here is flexible and that alterations can be made to different methods to meet workforce planning needs. Now, Joe McLaughlin will continue with expense planning and reporting sections of the P&L model.
Thanks, Nick. Next, we will step out of workforce planning and move into planning the non-workforce expense accounts. This will include both driver-based and trending-based forecasting. Once we complete expense planning, we will conclude with some of Anaplan's reporting capabilities. We will start on the expense management dashboard. On this dashboard, we can forecast individual expense accounts using trend methods, driver-based calculations, or manual overrides. First, we will select the GL account to plan from the drop-down list. In this case, we'll select marketing as the expense account. We will start with planning by setting up a driver-based forecast calculation. Here, we can pick a driver rate and a driver base amount, which will be multiplied together to create a forecast on the account. We will pick the drivers from the lists below. For driver dollars, we will choose average cost per marketing initiative. And for driver rate, we will choose marketing initiatives. Below, we can see the data for each driver variable. Some drivers, like headcount and sales, are automatically sourced from the calculated data within the model. Other drivers, like average cost per marketing initiative can be manually inputted and changed here. In the expense reporting section, we can see again that the driver-based planning is flowing through to the P&L. Next, we will look at setting up a trending forecast calculation. In this case, we will select Other Expenses as the account to plan on. Here, we can see that there is already a trend method and an adjustment percentage set up by default. However, we can change this default method. Let's dive into how we can change that now. So what I'll do is open up Manage Trend Assumptions here to take us to the Expense Trend Assumptions dashboard. Here, we can see that we can change the department default trend method and adjustment, which will apply to all accounts that don't have a specific method established yet. Let's now go down and set the trend method on the Other Expenses account. From the Trends method selection, we can select trailing 12, trailing 6, prior year, or actuals only. In this case, we'll pick trailing 6 and add an adjustment of 10% to give it a 10% lift. If you would like to quickly set up trending methods on several accounts at once, you can do so in this table as well. Now let's head back to expense management. Down below, under expense reporting, we can see a view of the GL expense accounts where the trended data is updated. Finally, if there are specific cases where neither trending nor driver-based planning work, we can make manual adjustments in the table here. Once again, we can see this adjustment reflect on the P&L table below. These are the major components of expense planning. Once we are complete, we can mark off expense planning complete in the checkbox above. With planning now complete, we can view the full P&L in the P&L reporting dashboard. We also have pre-built reporting dashboards where the P&L forecast can be viewed based on certain properties, like by state. This gives teams the ability to perform reporting based on specific properties or alternate hierarchies. Additionally, we have set up a year-over-year variance reporting dashboard, which compares the current forecasted year to prior year data contained in the system. If we scroll down on the dashboard, we can also see an example of variance reporting based on forecast versus actual data. These are two examples of a variance analysis capability that Anaplan has, which can be customized to be performed on several different scenarios and categories. Now we'll continue on to the forecast summary dashboard. This is also a reporting dashboard with a few new charts and graphs, but the major difference is that we have also set up the ability to perform some what-if scenario planning here. Up at the top, we can see that we have best case and worst case scenarios that we can plan at, as well as a percent lift to adjust sales for each scenario. As we adjust those percentages, we can see that the P&L forecast below updates in real time. This shows some high-level scenario planning, but Anaplan has the capability to get much more detailed, allowing for what-if planning on more scenarios and any combination of accounts you need. At the bottom of the dashboard, I can see the status of each forecasting workflow. I can see that for Department 1, our P&L has been finalized, as we have completed each of the planning steps for our sections. For other departments, I can put my division director cap on and monitor this workflow to see their progression and understand where any workflow bottlenecks may be. It should be noted as well that although all departments are visible here, we can easily limit the security access for each user to allow them to only see the departments that are relevant to them, ensuring that no sensitive data is shared inappropriately. Let's finish up the P&L forecast with a demonstration of Anaplan's new user experience. Here, we have a page in the new UX that mirrors the forecast summary dashboard. This is a view with new functionality designed to help the experience of the end user. We found that this new UX is particularly well positioned for easy reporting access on your phone or tablet. This concludes the walkthrough of our Accelerated P&L Planning model. To learn more about this model or our additional model accelerator offerings, such as financial consolidations or detailed workforce planning and management, please follow the link below to our Solution Spotlights page. If you have any questions about how this can be tailor-fit to your business needs, please reach out to us. We're always happy to schedule some time for a personalized demo.